Hi, this is Aptamer with the Bulletin Board Heroes here at Xaar's Traders Cafe for Wednesday, the 29th of May. Starting off with the FTSE 100, which has retreated from the top of the rising 2007 trend channel just near 8,500. We've got this steeper channel there from February, but hit the top of that there near 84.70 and back again. Looks as though the idea that we might have to test for the channel there at 8,200 is still on. And only really be counteracted by a break back above 83.30, which was support previously. The other negative at the moment is the way that we're just about to break that uptrend line in the RSI window from January, which obviously would not be a good look if we close below that at 50 on an end of day close basis. Next up is the DAX, and here you can see that the recent range, 18,500 to 18,900, we're still in the middle of it, but the risk is that we follow the FTSE and break 18,500 to hit the floor of that channel there. 18,200, something we've been factoring in for quite some time. End of day close through 18,900, and then we've got the chance of 19,500 by the end of next month, but at the moment looking a little bit soft, it has to be admitted. Moving on to the Dow, and here you can see that this market's struggling with the floor of the rising trend channel in place since back in the autumn. You could argue that the line is there rather than where I've drawn it previously, but whatever the case is, the market is struggling. RSI below neutral 50 at 44, and we really need to see the Dow on the right side of the 50-day line, 38,900. Otherwise, looks as though we would have a test of that gap floor there at 38,300 and maybe even 38,000. Over coming weeks, say the next 2 to 3 weeks. We need an end of day close back above that 50-day line and RSI 50 to negate the negative setup of the double top near 40,000 that we have just had. Moving on to Bitcoin, and here slightly messy picture as well in recent days. Here you can see that we are between the 50-day line and basically the record highs towards 74,000. Rising trend channel, the floor of the channel there around 66,000, and the 50-day line at 65,000. We want to stay on the right side of that particular area, and then possibly head up to the top of that rising trend channel at 90,000 over the course of the summer, so maybe July time at the current rate of progress. The risk is that we break down below the 50-day line at 65,000 and head down to the February support line projection, 57,000, before we have a chance of rallying. On to gold, which has been difficult to say the least in recent days, but we managed to break back after the double top towards 24.50 and bounce above the rising 50-day moving average at 23.30. The longer we stay above the 23.30 level and that 50-day line, the greater the chance of a move, not only through 24.50 but then up to 25.60 at the top of that rising trend channel from December by the end of next month. The RSI rebound at neutral 50 also helps make this chart look rather better than it did after the immediate effect of the double top at 24.50. Moving on to the stocks, and starting off with Aptamer, which has been an encouraging situation. Here you can see that we gapped up through a falling wedge back in April, and basically we've had 2 gaps higher so far this month. The view at the moment is that the longer we stay above the latest gap top at 0.74, the greater the chance of a move towards the 200-day moving average and the top of that broadening triangle from February at 1 pence by the end of next month. Next up is Bluebird, and here you can see that the shares have hit our second target there. That was around 1.5 pence. Next target there as high as 2.5 pence by the end of next month, which obviously take the shares to where they were back in the summer of 2022. Ideally, there's no intraday break below the initial May resistance, 1.38 in the meantime. We're also trading the aftermath of the golden cross that we had earlier this month. On to Castillo, or Castillo if you're very Spanish. Here we've got a bear trap gap reversal, and looking for the shares while they're above the 200-day line, which is starting to rise at 0.33 to hit as high as 0.53 by the end of next month. Obviously helped along by the current good vibes in copper. Moving on to Genflow, and here you can see that we've broken the resistance line there from back in, well, basically this time last year at 2.6 pence, and above that, looking for 3.8 pence by the end of next month, helped by the latest gap higher and also the golden cross between the 50 and 200-day moving averages this week. Ideally, we stay on the right side of that 2.6 pence resistance line now. Moving on to one of the stars of the show in terms of the recent IPOs. Here we've got Helix Exploration, and here shares in a rising trend channel that's been in place since the end of last month. The floor of the channel there at 18 pence. Above that, we're looking for 28 or 29 pence by the end of next month. If you're cautious, I suppose you wait for an end of day or end of week close above 20.5 pence before assuming the upper 20s are on their way. But we've got the rising 50 and 200-day lines there, and the setup looks strong. Next up is Kromek, which seems to be doing rather well in the current environment, so it's promising to exceed market expectations. Initial target here, 8.2 pence, and then after that up to 10 pence, hopefully by the end of next month, backed by the latest RNS, the rising 50-day line and 200-day line, as well as the unfilled gap to the upside, and the bounce off RSI 50 that we've had this week. So everything going on there, and ideally we stay above the 50-day line at 6.5 pence ahead of the 10 pence target on that situation. MetalNRG is next, and here you can see that shares consolidating well at the higher levels. We've hit all our targets so far. Well, the first one 008, the next one 0.12, and the final one up to 0.21, which we're looking for by the end of next month, or hopefully much sooner while we're above 0.2. Once again, we've had an unfilled gap to the upside and a golden cross there between the 20 and 50, 250-day moving averages. Going on to Ovoca, which I covered in a tweet yesterday. Here the shares following through, but the highlight here is that we hit our initial target there, 1.3 pence. The view at the moment is above recent neckline resistance around 0.95. We're looking for the shares to retest the best levels of the year to date, and head up to at least the top of the the 200-day moving average there at 1.7 pence, and the upper parallel of that broadening triangle from back in December. That could all happen hopefully by the end of next month. Moving along to Powerhouse Energy, which continues to impress. You can see that we've got a sort of U-shaped bull flag now. We're finding support at the old target there, 1.75, and moving ahead. We're still looking for the 2.5 pence area, which was basically the old resistance zone from this time in 2022, and hopefully we can get that by the end of next month. On to Phoenix Copper, where the comment that the shares seem to be the same price as they were before the $80 million bond arrived has sparked some interest, and we've hit our third target there, around 23.3 pence. Above that, looking for 31 pence by the end of next month, and ideally we stay above the 200-day line at 18.1 pence in the meantime. Quadrise is next, and here it's a bouncing situation off a rising trend channel there. We've also got rising 50 and 200-day moving averages, which suggests we're a couple of weeks away from a golden cross, or on up to a golden cross is typically the strongest part in the cycle. And we've also gapped up this week as well, which goes with the gap down that we had back in February. So it's a bear trap island reversal. We also had a gap down in March. So looking very strong here, and the top of that channel there up to 3.2 pence could be seen as soon as the end of next month, especially if we get a quick end of day close through 1.9 pence April resistance. Truspine is next, looking at something on the aqueous market, because somebody has to. Here you can see that we've got this broadening triangle gap through resistance, or above old resistance at 2.25 pence. Above that, looking for 4 pence easily, which is the top of that triangle, and perhaps up to as high as 5 pence by the end of next month. But the key here is staying above the floor of that gap there at 2.25 pence. Very encouraging looking chart there. On to Xaar, and here We've broken recent neckline resistance, February resistance of £1.30 and the 200-day moving average, as if it wasn't even there. And above that 200-day line at 136 on an end-of-day close basis, we're looking for up to £1.90 plus by the end of next month. Looks as though decent reversal of that gap down that we had back in November is on its way. Finishing off with Wildcat, obviously we're waiting for the big one in terms of news, but in the meantime, we've broken a trend line there from back in December. That was around the 0.15 pence level. Looking for the shares to at least head back towards the 200-day moving average of 0.23 by the end of next month, even if they then fall away after that. That's it for me today. More updates tomorrow.